Good morning, everyone, and welcome to the Audit Committee meeting for August 16th, 2023. I'd like to call the meeting to order. It's 10 a.m. My name is Paul Russell, and I represent Lower Sackville. Just as a reminder, this is the committee meeting where we have members of the public who are joining us to provide their expertise in reviewing the financial statements of HRM. I'd also like to acknowledge that the Halifax Regional Municipality is located in Mi'kma'ki, the traditional and unceded lands of the Mi'kmaq people. The municipality acknowledges the peace and friendship treaties signed in this territory and recognizes that we are all treaty people. The next item on the agenda is the approval of the minutes of March 23rd, 2023. Can I have a motion to approve the minutes? Thank you, Councillor Lovelace. Can I have a seconder, please? Thank you, Councillor Stoddard, who is sporting styling new hair, which is great. Are there any errors or omissions to the minutes of March 23rd? Not seeing any. All in favor of the minutes, please signify by saying aye. Aye. All opposed? Great, those minutes pass. Next item is the approval of the order of business and approval of additions and deletions. Over to the clerk. Do we have any changes today?
No additions or deletions from the clerk's office.
Okay. Thank you very much. Can I have a motion to approve the order of business? Thank you, Mr. Mayor, and Councillor Cleary for seconding that. Are there any changes from the committee? Not seeing any. All in favor of the order of business as presented, please signify by saying aye. Aye. All opposed? Great. We have an order of business. And call for a declaration of conflict of interest. Not seeing any. The next item on the agenda is the year-end financial statements and fourth quarter financial report. We have David Harley with us to present that. So welcome, Dave. And I'm going to hand the floor over to our CFO, Jerry Blackwood.
Thank you, Mr. Chair and members of Audit Committee. Welcome. So today we'll be presenting the year-end financial statement. So we have David Harley, Director of Financial Reporting and Accounting, which will present our year-end financial statements and our general rate surplus. And we have Carrie Blair, Senior Partner from KPMG, who will be presenting the audit findings report. Certainly happy to take questions, and as per best practice with Audit Committee and review of financial statements, we do recommend that you have an in-camera session with Mr. Blair. Staff can leave. With that, I'll turn it over to Mr. Harley, and just want to say that, the financial statements presented here today reflect a moment in time. HRM continues to have a strong financial position, but certainly, we know we do have unfunded liabilities and asset renewal obligations in the future that will be challenging. So with that, I'll turn it over to Dave. Thank you.
Thanks, Jerry. Dave Harley, Director of Accounting and Financial Reporting, and as stated, I'm here to take you folks through our annual financial statements, our consolidated annual financial statements, our statement of general rate surplus, and our statement of the miscellaneous trusts. So just to start the conversation, we're going to start a quick look at our governance and responsibilities. This is just outlining the responsibilities of the Audit Committee and KPMG, and what the responsibilities of each one are in terms of the passing of our financial statements and the audit. Jerry spoke to our financial position, so I'll just move on to our consolidated entities. This is just a listing of all the entities whose financial information gets consolidated in with the HRM information in order to prepare our consolidated financial statements. So on our financial statements, we are expecting to receive an unqualified audit report from KPMG, and we do prepare our financial statements in accordance with generally accepted accounting principles and the public sector accounting standards. So we're going to start with our statement of financial position. The statement of financial position is our balance sheet. It it highlights 4 key figures: the cash resources of the municipality, our net financial asset position, our non-financial asset position, and then our accumulated surplus building out of all those other items. So with our statement of financial position, you can see at the bottom there, our accumulated surplus is $2.6 billion. That's up from $2.4 billion a year ago. And on the next few slides, I'll take you through some of the individual items that make that up. So looking at our financial assets, our cash has increased significantly over the prior year. A big chunk of that is due to the way we classify our investments. So investments that are less than 90 days are considered to be as cash for our financial statement purposes. And due to the timing of our investments, we've had a big swing in the amount of investments that we classified as cash for our financial statement purposes versus the previous year. And you can see the offsetting decrease in our investments below that as a result of that change. In terms of accounts receivable, the increase is largely due just to the timing of the receipt of our receivables. We've had an increase in land held for resale due to an increase in business park lots. I've spoken about the decrease in the investments. And finally, our investment in Halifax Regional Water Commission has increased, and that's primarily due to a remeasurement gains on their defined benefit plans for the year. Moving to our financial liabilities, you can see AP. The increase there is largely related to accruals and to the timing of payments. We had some large tax prepayments, about $67 million, and some payroll accruals as well built in there based on the timing of our payroll. We also had some new liabilities included from our asset retirement obligation. It's a new standard that came into effect this year and resulted in an $18 million liability being recognized for retirement of capital assets in the future. Deferred revenue has decreased. That's largely due to a decreased receipt of early payments for the interim tax bills compared to the prior year. Employee future benefits. The decrease is a result largely of a decreased liability for long-term disability pension plans. And you can see additional information on that in notes 9 and 10 to the financial statements. You can also find information on the pension plan in Note 9 of the financial statements, and detailed information on our pension plan can be found in the financial statements of the Halifax pension plan. Asset retirement obligations, this is the new standard that came into effect this year. So it's an increase in the liability for future remediation of assets when they're retired, and it primarily affects landfills, underground storage tanks, and buildings with asbestos. The solid waste facilities management liabilities were part of the standards from last year. That standard has been replaced by the asset retirement obligation. So that $3.3 million that we had as a liability last year is now included in the $18.9 million liability for the asset retirement obligation. And finally, long-term debt has increased as a result of issuing more debt than we redeemed in the prior year. Looking at our non-financial assets, the largest piece is obviously the tangible capital assets. So we added $303.3 million worth of assets in this year. The largest portion of that was roads and infrastructure, and that was about $130 million related to the road transfer from the province. So those came into our books this year where they weren't there in the prior year. We also had increases in land and land improvements of $38 million, $44 million in buildings, $48 million in vehicles, $20.4 million in machinery and equipment, and we actually had a decrease in our assets under construction of $32 million. These numbers are offset by depreciation in the year of $147 million. Next, we'll move on to our statement of operations, which would be our profit and loss statement for the year. So looking at revenues, we start with taxation revenue. So we had an increase in residential taxes of $24.5 million, largely due to an increase in the average assessment growth, coupled with a decrease in the tax rate in the prior year. We had an increase in commercial taxes of $9 million, which was due to a decrease in the commercial assessment of 0.5% and a tax rate increase to offset that. We had $18 million in revenues this year that we collected for the first time as part of the climate action tax. We had an increase in the mandatory education area rate of $5.6 million, correction services of $0.5 million, and the Metro Housing Authority of $0.3 million as part of our provincially mandated taxation. De-transfer tax, for the first time in several years, has decreased. We saw a $6.4 million decrease in our de-transfer tax, up from our high of the previous year, or historic high of the previous year, I should say. Taxation from other governments, the increase there is due to grants in lieu from the federal government and PILT. User fees and charges. There was some rebound for transit fares in the year of $7.9 million, as we saw ridership continuing to increase over the COVID years. We saw an increase in ABC's revenue, our agencies, boards, and commissions, and those are largely due to the MDFs and their rebound from post-COVID lows in terms of people as well. That was about $21 million. Recreation fees for HRM were up about $2.8 million, and then we saw parking revenues up about $1.5 million. The marketing levy went up $1.7 million, and we had a few other smaller incidental increases in facility rentals and tipping fees. Government grants, the increase there is largely due to ISIP funding. It was about $44.5 million for the Ragged Lake Transit Center expansion, fleet electrification, and the phase one of the Burnside Transit Center. We did see a decrease in gas tax funding for the year, though, as that had been doubled up in the prior year, and that was not repeated in this year. Investment income, the increase there is largely due to the rise in interest rates we've seen over the prior year. Penalties, fines, and interest increased due to an increase in SOTs and parking tickets. Land sales, contributions, and other revenue increase was due to the road transfer from the province of Nova Scotia. And we had an increase in investment in the Halifax Regional Water Commission, largely due to an increase in their operating revenues, partially offset by an increase in their expenses. Moving on to expenses. Compared to the prior year, general government services showed an increase of $17.9 million. That's largely related to compensation and benefits, which was about $14 million. We did see an increase in building costs for leases and repairs and maintenance of $1.7 million, and an increase in utilities, goods, and supplies of $1.5 million. Protective services saw an increase of about $2.5 million. This was due to an increase in compensation and benefits, as well as capital cost contributions to Halifax Water. Transportation services increased $25.8 million due to increases in salaries and benefits. Big one was transit fuel costs were up about $8 million over the prior year. Winter works contracts had increased about $4.3 million, and we had increased contract costs related to the road transfer of about another $2.1 million. The move to road state of good repairs from capital to operating increased the operating expenses by $1.7 million and increased transit maintenance costs of roughly $1 million over the year. Environmental services increased primarily due to an increase in waste collection due to increased diesel costs, as well as an increase in amortization costs. Recreation and cultural services increased $33.4 million. Salaries and benefits made up about $6 million of this increase, primarily related to an increase in casuals, offset by lower deficit funding required for the MDFs for the year. The ABCs reported a combined increase of $17 million in operating expenses, and this was also largely due to the continued COVID recovery. So the annual surplus for the year, based on the revenues and expenses we reported, was $208 million, and including the accumulated surplus at the start of the year and the remeasurement gain or loss from the investment in Halifax Water, that leads us to our accumulated surplus of $2.6 million. So that concludes the look at the consolidated financial statements. So next we're going to move on to the general rate surplus statement. So for the year, we had a general rate surplus of $3 million. This was largely made up of savings we saw within our fiscal department. The rest of the business units actually had a combined deficit, but we made that up with savings through our fiscal. So we had savings in our valuation allowance of about $3 million. We saved about $4 million in a one-time saving for our long-term benefits for the retirement allowance, the way that was done by the actuary. So our future liability there has decreased by about $4 million. So those are kind of the biggest chunks of what makes up the general rate surplus. And as per the Halifax Charter, we are required to take that general rate surplus and move that into the options reserve for the end of the year. And there's a motion in the package to move that money for to be in compliance with the Charter. So moving on to our miscellaneous trust funds. So you can see we have cash of about $8.2 million. This is up about $312,000 over the prior year. The cash has increased primarily due to we had increased tax sales revenue throughout the year. And we've also had an increase in accounts receivable, and this is largely due to accrued interest on tax sales. For our liabilities, we can see that due to Halifax Regional Municipality has increased, and this is a requirement to, we have to move tax sales surplus balances that are 20 years past their redemption period into the reserve. So that's what that amount is. It's money owed to the reserves from those tax sales surpluses. Funds equity has increased about $315,000, and the details on that are in the schedule included in your financial statement package. Looking at income and expenditures, the income has increased $225,000. This is related to investment income, which was increased due to the increase in interest over the year. And then we had increased tax sales compared to the prior year, as already mentioned, which is what was driving the majority of that increase in income. Expenditures, so we have an increase in expenditures as well of about $253,000. Largely, this is driven from interest revenue that had to be transferred to the operating accounts of $108,000, tax sales interest of $110,000, some refunds and court orders related to tax sales, which we had to transfer out for $82,000, and we then had net transactions of $17,500 for the Sackville Landfill Trust donations, and we had a donation for made from bursaries and tax sale transfers to reserves of $43,000. So we'll move on to the pieces we have from our fourth quarter financial report. So we'll start with councillors' funds. So for district capital, we have a budget of $3.1 million. Throughout the year, we spent $2.3 million, and that means we're carrying forward $0.8 million for the next year. For district activity funds, there's a $72,000 total budget. $70,300 of that has actually been spent through the year, and that's leaving $1,700. For recreation area rates, there was a surplus for the accounts for these 21 area rates of a combined $1.2 million. We recorded revenue of $0.9 million throughout the year, and we actually had expenses that were pretty much on par with our revenues, so the surplus is still maintained at about $1.2 million come March 31st. And you can find details to the different recreation area rates in note 7 of the, attachment 7 of the report. For hospitality expenses, during the final 3-month period of the year, we had $13,000 in hospitality, resulting in a year-to-date total of $18,300. The vast majority of that $13,000 was related to the New Year's levy that was held at City Hall. And so moving on to expenses for reportable individuals, local travel for the quarter totaled $13,000. We had out-of-town travel of $3,000 and a few incidentals in development and training and miscellaneous. So the total for the quarter was $18,000, and that led to a year-to-date total of $88,000. So that concludes the pieces of the financial report that we're here to present today. We did also want to bring forward some work that we're starting this year that's going to come into effect for next year's reporting. And this is related to some work that's been done towards the recommendations made by a task force on climate-related financial disclosures, so TCFD. So what this group has done is they've compiled a list of 4 core interrelated elements and 11 recommended disclosures that they feel should be recorded alongside your financial reporting information. So while we're not in a position to be able to report those this year, we are kicking off that work now to be able to actually bring those recommended disclosures forward as part of our financial package within the next year. So there's some of the benefits of doing this is it's allows you to build internal capacity for managing climate risks. You can integrate climate-related risks into your budgeting and long-term planning, and you can enhance access to government and other sources of external funding if you are aware of what they are and you're actively working on these projects. So as I said, we're not there yet, but we feel this action aligns with our action item 38 of the Halifax plan to incorporate these financial reporting or these non-financial reporting pieces for climate into our financial reporting. And with that, that concludes the presentation. So I'm happy to answer any questions you may have.
Thank you very much, Dave, for that thorough presentation. Go ahead, Councillor Lovelace.
Thank you, Mr. Chair. Would you like me to throw the motion on the floor? It's a long one. I move that the Audit Committee recommend that Halifax Regional Council approve 1, the consolidated financial statements of the Halifax Regional Municipality for the year ended March 31st, 2023. 2, the statement of general rate surplus of the Halifax Regional Municipality for the year ended March 31, 2023. 3, transfer of $3,079,234 to the options reserve Q421 to reduce the general rate surplus to 0. 4, the financial statements of the Halifax Regional Municipality Miscellaneous Trust Funds for the year ended March 31st, 2023. And 5, the appointment of KPMG to the external auditor for the fiscal year ended March 31, 2024. 6, the fourth quarter report for 2022-23 on district capital, district activity, recreation area rates, hospitality expenses, and expenses for reportable individuals. 7, approve unbudgeted withdrawals of $17,480,281 from the Capital Reserve Fund, the Capital Fund Reserve Q526 to fund a shortfall of CAPP POOL in fiscal 2023-2024.
Thank you, Councillor Lovelace. Can I have a seconder? Thank you, Councillor Cleary. Go ahead, Councillor Lovelace.
I actually think I need a break from reading all that. No. So thanks, Dave. Really appreciate the report. First question I have is I don't see the presentation listed for the public. I don't think I received your presentation. So I'm wondering, could that be distributed so that we have that? I really appreciate having those bite-sized pieces in the presentation. And I think the public will as well. You said road transfer a few times, and obviously this was, a huge investment, I guess, for the municipality to take over. I think it was 18 bridges and 300 lane kilometer of roads from the provincial government. So my question to you is about the valuation of assets. Obviously, at the time of the transfer, we didn't even know where all of the assets were as far as the municipality was concerned. There was a lot of work up front that was done in the previous fiscal year. So I'm just trying to understand when those assets are transferred and HRM under that transportation budget line that you indicated, when those transfers are, when the transfer takes place, how do we then fully understand the liability that the municipality is now facing? Because I'm just trying to understand at the end of the day, what's the cost to property owners? I don't know that we've fully disclosed that. And I'm trying to understand where we would see that as a expense line, as a liability. My other question to you is TCFD. I'm really happy to see that, because that, of course, is another very important question that we need to understand. How much do these natural disasters actually cost the municipality? Obviously, we are going to the federal government, provincial government for support to be able to have a balanced budget sheet. But when and I know Jerry and we've talked about this before, but the financialization of natural assets needs to be a part of this understanding for natural disasters and the financialization. Obviously, at the end of the day, how much does it cost us? But where do we need to ensure that we put more funding to have those natural assets do the job that they need to do, such as wetlands, for example? So those are just my 3 questions for you, Dave. Thank you.
Through you, Mr. Chair. With the road transfer, so while it was $130 million in assets that came onto our books.
Sorry, how much?
About $130 million in assets.
130 million.
Yep, so that isn't necessarily an expense to HRM. What that is an increase in our asset base. So
Yeah.
what we actually have is expenses related to the maintenance and the cleanup of those roads, snow plowing, things of that nature. So those costs are actually going to be borne out through our operating budget as
Yeah.
part of the Public Works largely. Their operating budget increases that we've had to make to their operating budget to handle those additional work that has to be done there.
And is the depreciated value included within that?
So the depreciation, we don't tax for depreciation. The way
Okay.
depreciation works is we tax for the funding of the assets on the front end when we're actually building assets and doing that because we're taxing to fund those assets. When it comes to depreciation, that's an expense on our financial statement side, but it's not incorporated into our general rate surplus, which is what we're taxing based on.
Okay. Okay, that's helpful. So 130 million in assets, and expense-wise, we're not yet clear.
Expense-wise, we did see some additional costs this year, but I don't know if they've, I mean, that's going to continue to evolve.
It's ongoing.
Yep.
Yeah, okay. And as far as the natural assets are concerned, I guess that's just
Yeah.
an ongoing question as well?
Yeah, so we have begun some initial work at valuation of our natural assets. We're not at any point where we're ready to bring those forward as part of our financial statements, but that work is ongoing and will continue to be ongoing until we do that. So there are some standards that are being developed around that, but there's no clear one way of doing, of valuing natural assets for, is it replacement cost? Is it anything else in terms of remediation that you need to have incorporated into your numbers? So while those standards don't exist, we don't have them built in, but we are actively working on, looking at what's out there in the marketplace. There's some tools that I know have been identified that maybe could help, but we're still evaluating whether or not what we can do in that area.
So we will see changes to the financial reporting, though, in the near future, which is great. There's some good work taking place. Thank you, Dave.
Thanks.
Go ahead, Chair.
Thank you, Mr. Chair. Just to add on to Dave's answers there. So yeah, the piece on the natural assets, again, we'll work forward with that, but I think we got three claims going on right now, so it's a little bit of unplanned work coming up there as well. So, but we'll continue to forge forward on that. Just on the road transfer piece, Dave got a lot of numbers bouncing around in his head to bring this here, but I think not the last budget, but the budget before, I think it was the 22-23 budget, we started to build in the cost of maintaining those roads. So I think it was around $5 million a year on operating and $2-3 million in capital. And that was part of our budget communications that we pushed out that year. So that has been somewhat disclosed to the public as part of those new costs that were put in the 22-23 budget. Yes, yeah.
Yeah, okay.
Yeah.
Thank you, Chair.
Thank you. I'm going to remind people that the question should be of clarification about the budget. We do also have a presentation that is going to be coming from KPMG immediately after these questions of clarification. Go ahead, Mayor Savage.
Thank you, Mr. Chair. Thank you, David. Just a couple of questions. You mentioned we have some costs incurred as a result of Hurricane Fiona in the last budget. It's going to be even more in this year's budget. How do we account for what we're going to be claiming from the federal government and DFAA and or potentially from the provincial government as well? Disaster financial assistance.
Thanks for the question. Through you, Mr. Chair, to the Mayor. So when it comes to those claims, we're working closely within our groups to figure out what those total costs are, and we've been in communication with the provincial EMO about these financial claims that can be brought forward. Our understanding is that generally the timeframes for receiving the monies for these claims is about 2 to 5 years. So we don't expect to be receiving these funds at any point or any time in the near future, and we're also still going through and making sure we have the proper amount of documentation and a proper understanding of which costs are claimable and not claimable. So we haven't, we're not accounting for significant monies to be coming in from this at this point in time. We do realize these are funds that are going to be coming back to us in about, as we said, 2 to 5 years, with any luck. But because we haven't done those claims yet, well, we're not really at a point to say how much money we're going to be receiving, so we're not accounting for it that way. I think what we'll see in the near future is a report coming to Audit and Finance about utilizing the risk reserve in the meantime to bridge that time between when we have these events and when we're going to be receiving those claims to top up those funds.
Right, so this is going to become more important as we have more disasters. So, like, for example, when we got the Hurricane Juan, 2 to 5 years is optimistic, as sad as it sounds. When we got the Hurricane Juan money, I think it was close to a decade, wasn't it, that it took to get the money?
I'm not sure if it was a full decade to get the money, but that claim and the back and forth with the province and the audits that went on with that claim were actually well over a decade in terms of the length of time.
So I'm just wondering, like, when that money comes in, that goes to the risk reserve. Do we have a specific fund? It seems to me we're going to have to look at disasters differently. So maybe that's the report you're going to bring forward and say, these are the costs and this is what we expect to get back. Because it's not going to go down in the years to come. It's only going to go up.
And what we're doing, so there's going to be 2 parts to this. The first one is we're bringing a report to mitigate the short-term impacts of these claims by utilizing the funds that are currently in the risk reserve. We're also doing an overall review of our reserves, and the risk reserve is part of that, where we've identified we are probably going to need additional funding to go into that reserve for the future based on the severity and the regularity of these events. So.
Thank you, Dan. Winter Works is up $4 million? Over budget $4 million? Is that what you said?
No, it's not over budget $4 million. It was over the prior year $4 million. So that's as a result of new contracts that were coming in at additional prices with inflation and the increased
So what was it
rates.
versus budget?
I don't have the information versus budget offhand. I
Okay.
could follow up with you on that if you'd like.
It's in here somewhere. I'd like to I mean, it was a pretty mild winter by all accounts. Sometimes people don't understand that it's not just how much snow you get, it's freeze, thaw, and all that sort of stuff, but I'd be interested in that. The last thing is, can you explain number 7 in the recommendations, what that means? The unbudgeted withdrawal of $17 million?
Yes, so what we are looking for is we're looking to withdraw $17 million from the capital fund reserve to fund up what we call cap pool. So cap pool is a source of funds that we have for our capital budget, and where those funds come from is unutilized funds from previous projects. As those projects are completed, if there are unutilized funds, those funds flow into cap pool and can then be used to fund future projects. So in the recast budget for the COVID year, what happened was there was an amount of money that was utilized from cap pool to fund projects, and it was based on the expectation of future projects closing with funds remaining in them. What happened, though, was inflation started to increase. Those additional funds never materialized. So cap pool is now overdrawn in that regard by about $17 million. We're looking to just make that whole from the reserves, and that will allow us to get back to a state where we can use cap pool going forward if we get to a point where inflation no longer is eating up any of the contingencies on these projects and we have those funds available to then utilize.
Right. But if I'm sitting at home looking at, wondering what my taxes are next year, is this a $17 million liability that we have to take care of when going to the taxpayer or finding it somewhere else?
It could potentially go as an increase to the taxes. That's why we're looking to utilize the capital fund reserve to use that. So there would be no tax implication in that regard.
And so we have a $3 million surplus at the end of the year,
Yes.
which we are legislatively bound to dedicate to a reserve fund, and that's what we're doing with the $3 million.
Yes.
Was there any other last-minute transfers of any money to bring the surplus down to $3 million, or was it that's legitimate $3 million?
We did move
I don't
some
mean
money
that it
into
wouldn't
the
be
reserve to deal with the cap pool issue from some additional surplus that would have existed otherwise.
Second. Thank you, Mr. Chair. Just on your question with respect to the cap pool issue and you know, that you mentioned, is this a tax increase for this year? The strategy around using cap pool as a funding source back in the recast budget, okay, was to, at that time, I think you always said we're preparing for the worst and hoping for the best. that was a strategy that was used in terms to keep the tax increase to a minimum level. So when you look at our, our 4-year capital plan at that time, was probably, close to $1 billion over 4 years. So if you look at, you could, out of those 4 years, you could get back $21 million. What happened was only, doing my math here now, $6 million of it materialized. So, we feel this year we need to deal with that and make sure we mitigate that. So it's, as Dave said, it's not a deficit and doesn't go to the tax rate or the tax increase next year. So we'll deal with it through reserves.
Okay. Prepare for the worst and hope for the best. As you know, I'm a Habs fan, so I come by that often.
Me too.
these days, right? Thank you. And now David gets to go. So, thank you.
Thank you, Mr. Mayor. Go ahead, Councillor Hensby.
Just a couple quick questions on the area rates. Didn't we just bring a new policy in recently about administrative charge for the administration of area rates? So is that coming for this fiscal year? Because I don't see anything in regards to this past fiscal year. So is that?
Yeah, thank you, Councillor, for that question. We did, as part of, our budget reduction exercise, last year's budget, bring forward a administrative charge for area rates and private homeowners associations. And I think we brought in, it was like a 5 or 10%. Council brought it down to 2. With the recent events that have happened, staff, we thought it would be insensitive to bring that report forward to implement an area rate fee, because some of the areas that are impacted were impacted by the fires and floods. It's only $15,000 for the year, so staff decided that we would not implement that this year, and we would probably bring it back in next year's budget for consideration to council.
And I'm curious about the area rate we charge in the Eastern Shore East region for the sidewalk in Sheet Harbor, the $5, $15, and $25 area rate. I don't see any accounting on the pages here, but it must be in a departmental budget somewhere.
Through you, Mr. Chair. Yes, that is not covered by, what we're reporting here is the recreational area rates, and that is a different area rate. So that number comes into our regular revenue, and it's not held specific to a use of a group like one of these recreational community groups. So it's held with the budget comes in, and it's money spent within the business unit budget on those sidewalks in that area.
Because we are making a business plan to change the model of how that's administered and stuff, so just want to make sure you're aware of that, but I wasn't sure where the monies were being reported in this report. Okay, thank you.
Thank you very much, Councillor Hensby. I see no further names on the list for questions of clarification for this report. I'm going to ask Carrie Blair to step forward. Carrie is the lead audit engagement partner from KPMG. And so we have the report from the external auditors. And welcome, Carrie.
Thank you. It's a pleasure to be in front of the Audit Committee this morning. We provided a audit findings report for the committee. If I can start that myself. The report's dated August 8th, which is the date it was prepared for today's meeting, so there would be some updates that I'll provide as we go through the report. I'll touch on the highlights quickly. If I look at the actual slide that deals with the audit highlights, I just want to remind the committee that we were in front of this committee to present our audit plan This report follows on to that plan, so the information that is contained within the audit planning report is relevant to the audit findings report. Any updates to our plan are included here, which there were no significant changes to our audit plan. I remind the committee that the financial statements that management has provided commentary on previously in this meeting is their responsibility, and they're prepared under the public sector accounting standards. So those would be different from how budgets are generally prepared, and they include a consolidated view of the Halifax Regional Municipality. Our responsibility as auditors is to complete the audit in accordance with Canadian auditing standards, which we are. Our audit is ongoing, and this provides an update or highlights of that audit. We've attached an audit report to this presentation in your package that outlines responsibilities of management and auditors, and concludes on what our findings would be, subject to finalization of all of our procedures. There's no significant matters to report. One minor update. We have on our page 2 an uncorrected audit misstatement statement that says no matters to report. There is one uncorrected audit misstatement that was found in the interim period. It's for roughly $800,000, and it's just as part of our regular procedures around subsequent events, including review of subsequent payments. An invoice for a capital expenditure was found in the amount of $800,000. So there would be an uncorrected misstatement that would increase the accounts payable by $800,000, as well as increase capital assets by $800,000. So there's no impact to the statement of operations, only to the statement of financial position, and no change to the cumulative surplus, if that transaction were recorded. The financial statements were prepared under the concept of materiality. Management does not believe that that transaction would be material to the financial statements. We take that into consideration as we form our audit opinion, and do not believe that would change our audit opinion, which is an unqualified audit opinion. As mentioned, the status of our audit, we have received now all support that we need to complete our audit procedures, and our staff are completing those audit procedures over the next few days, as well as we're completing our quality review procedures, which would include my review of all the detailed information to the extent required, and an independent review by an engagement quality reviewing partner to ensure that we've complied with the auditing standards in the current year, in our opinion. We're having conversations today with this committee to complete those discussions, and at the end of the audit, once the financial statements are approved, we would expect to receive a management representation letter that would confirm that the management has provided and disclosed to us all information required as of during the audit period. Significant risks, we had highlighted management override of control. This is a mandatory risk under our auditing standards. We do a number of procedures. As mentioned, we have not changed our approach here. Our procedures were ongoing at the time. In particular, one procedure that we do is a detailed review of high-risk journal entries. So we get a listing of all of the journal entries that are booked throughout the year, which, as you can imagine, is voluminous in an entity like the Halifax Regional Municipality. However, we filter through those to identify where there could be potential errors or matters to note, and at this time we've not found anything. So we've been completing those procedures over the last, since the 8th, and nothing has come to our attention, so there's nothing to report with respect to management override controls. Employee future benefits, again, these would relate to liabilities that exist on the financial statements that would have an element of estimation. That estimation element would manifest through potential discount rates that are used to determine the estimate of the future expenditures that the organization is responsible for. Management does use external experts to help them in assessing those estimates to ensure that they're free of bias and fair. And as a result, we've completed a review of those estimates and the actual information that the appointed actuaries that management uses that they've provided, and don't have any findings to report. So we find them to be reasonable and appropriate under the auditing standards and the accounting standards. A few other areas of note. There was a significant change in public sector accounting standards related to asset retirement obligations. This replaced the current standards on landfills obligations, as well as introduced new concepts that would require there to be liabilities recorded for any retirement obligations that met a legal standard. Most notably, asbestos in buildings would be the most common matter. However, there could be other remediation requirements under legal contracts, such as leases, to return things to their state of original use. Management would have gone through a process to identify all the potential sources of asset retirement obligations, review that information. To the extent there was identified an amount that needed to be considered, obtain information to estimate what that amount is, and follow the standards around how to quantify and measure the asset retirement obligation, and as a result then record an adjustment prospectively in the financial statements. So you'll note there's no comparative information for the asset retirement obligation, because everything is being done at April 1st, 2022 forward, as opposed to going back and retrospectively adjusting historical financial information, which is permitted under the transitional guidance of the standard. We've largely completed those procedures now, and we don't have any findings to report back to this committee. Information that's required for us to communicate on control deficiencies. We don't have any significant control deficiencies to report to the committee. Accounting policies, I mentioned asset retirement obligations. There was another group of standards that were amended and adopted in the current year. They've been around for a while, in many reiterations. In particular, they relate to the measurement, recognition, and presentation of financial instruments, how foreign currency translation should be done under public sector accounting standards, financial statement presentation, portfolio investments. All of these were changed to accommodate, in particular, the financial instruments section, because it needed to align and conform with it. The most significant change that you'll note is there is a new statement added to your financial statements called the Statement of Remeasurement Gains and Losses. The reason for this being added is under the modified equity method, which the Halifax Regional Water Commission is accounted for. There is a remeasurement gain or loss for amounts that in their financial statements which do not go through their statement of operations but are called other comprehensive income. That amount would not be appropriate to put through the financial statement of operations of the HRM, and historically has been an adjustment directly to the accumulated surplus. Now there's a special statement to actually measure that and flow it through. So there was a reclassification and adjustment done on April 1st, 2022 to pull out those remeasurement gains and losses and call them as a separate component of your accumulated surplus, the remeasurement gains and losses. There's a statement now that shows the change year over year in those remeasurement gains and losses. And that was the only impact of that particular standard. And we've reviewed how management has gone about doing that and believe it's been appropriately presented and disclosed. No matters to report from a financial reporting perspective, which is to say that we've touched on what the key changes were in public sector accounting standards. In all material respects, we've considered the financial statement presentation, the form, content, etc. Whether there is any new accounting pronouncements, which we've previously commented on, and there's nothing on the horizon that would be of significance. And the qualitative aspects of the financial statement disclosure. So notwithstanding, is it factually correct? Is there anything misleading or omitted that should otherwise be there that would need to be there to make the statements make better sense to the reader, and we have no matters to report. It's just a matter for coming years. We have new independence requirements that we will adhere to effective next year. And that concludes, I guess, our presentation. There are additional slides in your packages that deal with appendices, such as the content of the management representation letter, as I mentioned, the audit report, required disclosures that auditors are required to make under the auditing standards that are there for your review, but nothing specific that I feel I need to comment on at this time. Welcome any questions.
Thank you very much, Kerry, for that presentation, and thank you again to Dave. Are there any questions for either Kerry or Dave? Are there any further questions? Go ahead, Carolyn.
Mr. Chair, just around the uncorrected, the $800,000 invoice, was that just one invoice? And what's your, like, I'm assuming you find little things here and there, and that's normal. When do you start thinking, okay, we need to bring this forward? What's your materiality for that?
Mr. Chair, to the member, materiality was reported in our audit planning report, so a quantitative measure, I believe, was we use is roughly 1% of total expenditures. So if you look at the total expenditures on the financial statements and 1%, it's somewhere in the vicinity, I think, of 13 million.
Yeah.
Is our materiality roughly. So once those errors accumulate, so we do have aggregation risk to consider, and part of that aggregation risk is to accumulate those minor errors. We look at anything less than 5% of materiality as being clearly inconsequential, and we don't accumulate those. However, this would be just over that threshold, and so we would put this on our accumulated schedule, and there's no other amounts on that schedule. So once we would start to get to within about, I believe it's 80% of materiality, that's when we would start to consider what, if anything, we need to address with this committee or with management. The standards require us, and we do encourage management to fix everything, but we do understand that sometimes the fix is not worth the value it provides to the reader.
And when was this invoice, when did this invoice come in or was accounted for?
Oh, it would have been processed subsequent to year end, and we would have found it in our subsequent events.
So do we know if it was like 1, 2, 3 months after year end, or?
I don't have those details
Okay.
off the top of my head, but I believe it would, we would continue to monitor that up to 3 months after, so it would be somewhere in that time frame.
Okay, and that's all the questions I had. Thank you.
Thank you very much, Carolyn. I don't see any further names on the list. Can I please get a motion to go in camera so that we can discuss anything else with Kerry? Thank you, Councillor Cleary. Thank you, Councillor Stoddard, for seconding that. Let's, all in favor of moving in camera? Aye. All opposed? Great, thank you. That passes. I'm going to ask staff and the press to leave the room. And let's move in camera. And I'd like to welcome everybody back to the public session of the Audit Committee meeting. Thank you very much, Carrie, for the information that you provided in camera. I appreciate it. We have the motion on the floor. I don't see any further speakers on the list. I've got a couple of questions, but for members of the committee, feel free to punch in if anything comes up. There have been a couple of mentions of cap pool, and I haven't seen a reference to this in the financial statements or in the budget. Where does this live?
To you, Mr. Chair. So cap pool is not in and of itself a set GL account or cost center or anything like that we actually have. So we actually have to calculate the value of our cap pool. So whenever these projects are closed, they return these funds over to I want to say the source, but they return them back to a holding area, basically, where we have funds available that can be used to calculate, or not to calculate, sorry, to fund up other capital projects. But it's a calculation that's done to get the value of what our cap pool is. So cap pool it's more of a theoretical than necessarily a hard thing like a GL or a cost center that we could actually have and show the value of.
So these funds are returned to this thing that is a calculation, but doesn't live really anywhere other than,
Well,
we'll let the CAO handle this one. Thank you.
Well, I'm going to take a shot because I'm probably the only one who was involved with the creation of it. Cap pool and crest pool are origins of the original multi-year financial strategy done after amalgamation. The capital budget is required to be a balanced capital budget in that it is funded, and there are two different calculations done around the capital funding. One relates to funding sources related to debt, which we call crest pool. The other one relates to cap pool, which are other sources of funding. Reserve used to be reserves, capital from operating, funding from other levels of government, or funding from third parties. So there's a reconciliation done and a spreadsheet that's maintained looking at planned funding sources for capital projects. And then the reconciliation looks at what was the actual cost of the capital project, and did the funding source actually materialize? So if we planned to fund a project using debt or capital from operating funding, did we need that amount? And if there is a credit, if you will, if we have more funding available than we actually required to deliver the capital projects, then that becomes a funding source that we can carry forward and use in the next year's capital budget, or we can use it to address problems with an individual capital project that might go over budget. We would come to council and look for authorization to use it. If we have a deficit in cap pool, what that means is that we have capital projects that have been approved by council in previous years, and the capital funding plan did not come true. So we have to fund the unfunded component in those capital projects. So that is what we are doing here. And it is typically a spreadsheet and a calculation that finance staff would be looking at in year-end in conjunction with doing the financial statements and closeout of capital projects.
Go ahead, Jerry.
Yeah, thank you, Mr. Chair. Just to add on what Dave and the CAO mentioned. So cap pool is a balance sheet account, and you typically would not ever see cap pool sort of like in any of our budget presentations or anything like that. As Dave and the CAO said, it's a funding source. So just a theoretical example would be if we did a capital project, say a building, and it was $5 million, and once that asset was delivered and there was $250,000 left over, we would close out that capital project through a reconciliation process. That $250,000 would go into cap pool, which could then be reallocated in our next capital budget. Just a theoretical example, just to provide some context.
So it's no longer in the project for the building, and it's not showing up on the GL, it's just somewhere.
The project for the building would be closed, the asset would be delivered, and then that would be capitalized on the financial statements in our assets, right? What would happen, yes, the funding, the additional funding through a reconciliation process, and once the capital account is closed and all the warranty period and everything like that, that $250,000 that I mentioned in that example would then go into the cap pool. That would then be reallocated during next year's capital budget as a funding source. So it would go to the balance sheet account, be held there as a funding source, and then moved to reallocate it to capital.
Okay, thank you, thank you. That was the big one. Dave, you've answered most of the questions. Two other things, and this was a discussion that we had here. We are going to need a significant amount of of funds from the risk reserve. We had a motion that was originally going to be coming to this committee to accommodate that because of the fire and the floods. And I'm wondering if you could speak to item 3 in the motion where we are transferring the $3 million to the options reserve, and, or Jerry, if you could, why are we not transferring that to the risk reserve? Because we're going to be needing that.
To you, Mr. Chair. So that $3 million that we're transferring to the options reserve, under the charter, we are required to put any unused surplus into an operating reserve, which the options reserve would be one of. So at that time, that does not say the council could not make the decision to move those funds into the risk reserve, or should they want to. We do have a plan to review our reserves, as we said, and we are going to be looking at ways that we can top up or identify a better amount that we should be holding within our risk reserve on a go-forward basis. So that work is underway, and we do plan to bring that back to council in the future for look at a potential funding plan for all the reserves, including that risk reserve.
Okay, thank you very much. I have nothing further. Go ahead, Jerry.
Thank you. And, Dave mentioned in his presentation, and it will likely be at the next Audit and Finance Committee meeting that we'll be bringing back a little bit of a proposal for council to consider regarding cash flowing the Hurricane Fiona, the wildfires, and the flood costs. And we can certainly look at, where we need to transfer any funding, and the options reserve could be a funding source there. So we can bring that back.
Okay, thank you very much. Mr. Mayor.
Thank you. Just a very quick question, probably, Jerry, for you. Is there anything in this, the end of this year's budget cycle, so the statements we're looking at, that would, in your view, have any appreciable change to the financial condition measures that the provincial government look at all municipalities? The 15 measures, we've always had an issue with the operating reserve was one, but we could argue that. But is there anything here that would change how they would look at us, the people who do those analysis?
Yeah, thank you, Mr. Mayor. I think what you're referring to is what we call the financial indicators report that the province does. I don't see anything in the statements that would certainly be a big impact on that. Obviously, I think on the 10 to 12 indicators, we're usually, I think they indicate pretty much we get green lights on everything except for some of our operating reserves. So I don't anticipate anything in these statements would impact that. Dave, anything do you want to comment on?
No, I'll just echo Jerry's comments. There's nothing in here in the results from that past year that really I would expect to have any significant swing on any of those indicators.
Thank you.
Thank you, Mr. Mayor. Thank you again, Dave and Jerry, for this. I don't see any further speakers on the list. Are we ready for the question? Question's been called. All in favor of the motion as presented, please signify by saying aye. Aye. All opposed? Great. Thank you very much. We have had our in-camera portion. There are no in-camera reports. The date of the next meeting of the Audit Committee, where we are only meeting twice a year in this committee, that is to be determined. And so can I thank you very much, Carolyn, for helping out and for serving on this committee. I really appreciate the opportunity to be able to open this up and invite expertise that we might not or do not otherwise have. So thank you very much, Carolyn. Can I have a motion to adjourn, please? Thank you, Councillor Lovelace. We stand adjourned. We will be resuming with the audit. Oh, we just lost a couple of members of the Audit and Finance Standing Committee, but we still do have quorum. So I'd like to call to order the August 16th meeting of the Audit and Finance Standing Committee. It is 20 after 11. My name is Paul Russell and I represent Lower Sackville. I'd also like to acknowledge, again, that the Halifax Regional Municipality is located in Mi'kma'ki, the traditional and unceded lands of the Mi'kmaq people. The municipality acknowledges the peace and friendship treaties signed in this territory and recognizes that we are all treaty people. Let's move ahead with some of the business. So can the next item on the agenda is the approval of the minutes of July 19th, 2023. Can I please have a motion to approve the minutes of July 19th? Thank you, Councillor Stoddard, seconded by Councillor Lovelace. Are there any errors or omissions? Not seeing any. All in favor of the minutes of July 19th, please signify by saying aye. Aye. All opposed? Great, thank you. Approval of the order of business and approval of additions and deletions. Over to the clerk. Do we have any changes?
No additions or deletions have been received by the clerk's office.
Okay. Thank you very much. Thank you, Councillor Hensby, for making the motion. Do we have a seconder? Thank you, Councillor Lovelace. Are there any changes from the committee? Not seeing any. All in favor of the order of business as presented, please signify by saying aye. Aye. All opposed? Great. Thank you. Business arising out of the minutes? I don't see any. Call for declaration of conflict of interest? I don't see any. Motions of reconsideration, rescission, consideration of deferred business, and notices of tabled matters are all none. Correspondence. Do we have any correspondence?
No correspondence has been received by the clerk's office.
Okay. Thank you. And do we have any petitions?
No petitions have been received by the clerk's office.
Thank you, and I don't see any from members of committee, and we have no presentations. Information items brought forward, there are none. So this brings us to the main order of business for the day. And today is a bittersweet day. Evangeline has been, she's going to hate me. Evangeline has, yeah, she's nodding. That's great. That's too bad. You have been our Auditor General for a long time, coming up on 7 years, and this is the last time that you are going to be making a presentation to the Audit and Finance Standing Committee because you're moving on, your contract is coming to an end, and I understand you found employment somewhere else. And so I would simply like to, on behalf of the Audit and Finance Standing Committee, on behalf of Regional Council, and on behalf of all of HRM, thank you very much for your service. We have something for you. So it's going to be an interesting next little while after this presentation, as we are working as a committee to just to move forward with this. Evangeline, I'd like to invite you forward. There are a few presentations, as I understand it, and then we would open the floor to questions following those presentations. And so whenever you're ready, the floor is yours.
Thank you. And maybe I'll just start by, before I move to my presentations, by saying thank you very much, first of all, Paul and committee members. And I just have to share, I have enjoyed my term as Auditor General immensely, more than I could probably describe, honestly. I believe my office has added value with the work that we do. We work hard to complete audits in areas of higher risk and to make recommendations that we think will improve programs for HRM's citizens, management, and staff. I really want to thank all of the management and staff in HRM. Your respectful approach to audit and your professionalism make the work that we do easier, so thank you very much. I'd also like to thank all of the councillors, both current and former, that I've worked with over the last 7 years, and in particular Audit and Finance Standing Committee members, Paul as current chair, and Bill Karsten and Steve Craig, who were former chairs during the time as well, and any current and past members of the committee. You were all great supporters of any work and initiatives that my office had, and I really appreciate that. And finally, I'd just like to say a big thank you to staff in my office, both those that are there at the moment and the ones who've sort of come and gone during my term or have retired. You're a very professional and dedicated group, and frankly, just a great group to work with. We've accomplished a lot, I think, for a small office, and that's entirely due to the hard work of the team. So I just wanted to say that, thank you very much. So I'll move into my presentation now, which it looks like it's already on the screen, great. So good morning. I'm happy to be here today to discuss 2 follow-up reports as well as an audit of HRM's management of cybersecurity. Ashley Maxwell is joining me for this morning's meeting. Ashley was the audit manager for the cybersecurity audit. I'm going to start with follow-up. So this is a review of outstanding recommendations. Once the initial follow-up is complete, we continue to monitor outstanding recommendations and report the results. So we recently followed up 2 audits from 2019, payroll management and road and sidewalk asset management. The payroll management audit initially had 9 recommendations. 5 were completed in June 2021 when the initial follow-up was done. And 1 of the remaining 4 recommendations has been completed in the 2 years since then. The remaining recommendations deal with quality assurance and monitoring processes to help prevent or detect errors in entering payroll information and to check accuracy of pay before it is processed. And I do understand that there are some other processes that take place in relation to pay at a more global level, but I do think it's important that those quality assurance checks be put in place. Corrective action like that is important, and implementation in this instance is not something where like costly systems or anything like that are required. Moving to the road and sidewalk asset management audit, the audit originally had 10 recommendations. 4 of those were complete during the first follow-up in 2021, and 4 more have been completed with this follow-up, leaving 2 outstanding. One of those deals with long-term funding, and the remaining recommendation that is outstanding relates to establishing performance measures, and both of those are also important issues to address. So moving to a more current follow-up, we followed up 2 audits from 2021, management of accounts payable and transit technology project management. The overall rate is 63%. That is below the goal that we have of 80% implemented after 18 months. For accounts payable, 3 of 4 recommendations were implemented. I'll note that the outstanding recommendation relates to establishing performance measures, and as I just said, that was an outstanding rec for road and sidewalk as well. And I would like to point out that performance measures are important, that they establish clear targets which management wants to achieve, and it offers elected officials, such as members of the committee and council, as well as the public, information that they can use to hold management accountable for achieving results. Moving forward, it is important to implement performance measures that include targets so that there's meaningful measures and they're not just statistics. Transit technology was also followed up. 2 of 4 recommendations are outstanding on that audit. 1 relates to support for annual capital budget. There have been some improvements since we did the audit, but the recommendation is still incomplete. It is important that transit addresses this and has a good process behind the numbers that it has for large capital projects. And it should be possible for somebody who's not part of that process within transit to follow the logic of how they've developed that budget. So the next follow-up reviews that will be on schedule for my office After 18 months, management of fire inspection and management of solid waste. And for fire inspection, I will say the office has started that work, but we paused it for a while for obvious reasons recently. And I believe it's getting started again now, so you'll see that one at some point in the future, and you'll also see solid waste. And then a follow-up of recommendations that were outstanding when they were initially followed up, LED streetlight conversion project and fleet vehicle use, car allowance, and mileage. And I do want to say that despite lower rates recently, I am still hopeful that those rates will go back up to achieve that 80% after 18 months goal. Management's assessment of the follow-up work that I've reported today was provided in the winter. And so I have had discussions, as I've mentioned at this committee before, with the new CAO regarding a process to ensure recommendations are implemented, and I'm hopeful that that will lead to higher rates. So I have a question slide here, and I'll leave it to you as chair to decide. Do you want to ask any questions you might have about follow-up now, or would you prefer if I continued and did the public portion of the cybersecurity audit presentation? Either approach is fine with me.
The two previous follow-up audits are first on the agenda as items. It would be best for the committee to, if we address both of these first. So at this point, I would be looking for anybody with questions about the previous audits that have been discussed, and I don't see any speakers on the list at this point. I'm just wondering what game plan there might be, what roadmap, what action plan there might be from staff's perspective to ensure that these audits, that these recommendations are completed. Thank you.
Thank you. Thank you, Chair. We have re-established a tracking spreadsheet in the CAO's office now. Sometime in the past, between transition of CAOs, two CAOs ago anyways, there was a drop in, or a change in the process of how that was done, and I suspect during the pandemic, also as, you know, attention shifted to other things, that the business processes around updating and maintaining that tracking sheet and following up on the recommendations, you know, wasn't the priority that it had previously been. So I'm hopeful that now that we've got that reestablished, we will be able to return back to the 80% achievement levels. I will be cautious, however, in setting too high an expectation for recommendations related to business units like Public Works and Parks and Recreation that are currently fully engaged in cleanup from wildfire and from flooding. So if we have recommendations that pertain to those business units from outstanding audits, I'll be cautious about pushing those business units too hard, and we'll be focusing on audit recommendations that are applicable to business units that aren't engaged in that cleanup. So I expect that, you know, we'll get everybody to 80% on their audit recommendations, but I suspect we'll be doing it in a sequenced approach, focusing more on the corporate services related business units first, for instance, the payroll audit, and looking at some of the transit related items before we look at some of the other areas.
Okay, thank you. Go ahead, Jerry.
Yeah, thank you, Mr. Chair, and thank you, CAO. Yeah, just to the CAO's comments, I mean, just on the payroll audit, just on those recommendations. So there's two things in flight right now that, you know, since we've responded to the Auditor General on that report. One, we have a performance excellence project between our Human Resources Department and our Payroll Department, and it's around looking at the process and controls between EC, which is all our employee data is stored, and SAP, which does the payroll function or the paying of employees. And just recently, a project was launched, corporate scheduling, which will bring, all of our, pretty much our whole organization forward in terms of automated time entry. So that will free up a lot of staff's time from manual entry to be able to do some of these more audit checks that the Auditor General has recommended. So just speaking on the payroll one, that we have that one well in hand right now. Thank you.
Thank you very much, Jerry. I don't see any further questions on the board. Thank you very much, CAO, as well. And thank you, Evangeline, for that. There are no motions related to the follow-up audits. We will keep an eye on them. Next, we have item 12.1.3, the management of cybersecurity audit. Go ahead, Evangeline.
Thank you. So I'll start with an overview, and then I'll turn it over to Ashley for some of the sections. So overall, we found a lack of appropriate oversight to manage cybersecurity risks. We found HRMIT identifies some cybersecurity risks, but policies and processes to document and manage those risks are limited. Policies should be developed to cover cybersecurity risk areas or updated. We also found physical access to network infrastructure needs improvement. There will be more details on that shortly. And then, of course, there is also an in-camera report from this audit, given the nature of cybersecurity. So for the public report, I'm going to turn things over to Ashley for the next couple of sections.
Thanks, Evangeline. So as Evangeline mentioned, we found information technology management is not providing appropriate oversight to ensure cybersecurity risks are managed. While IT has included cybersecurity practices and risk management as strategic areas in its strategic plan, IT lacks detailed plans and timelines to move forward on these. Cybersecurity practices were reviewed, and the result was used to create a cybersecurity roadmap to address priority areas. However, the roadmap lacks detailed plans or timelines. Additionally, management told us they are unsure what resources they will need to implement the roadmap. It is important to develop plans and timelines, including identifying resource needs, to ensure these are addressed in a timely manner. Management expressed resource concerns throughout the audit related to cybersecurity. Management has not assessed needs or requested additional resources. IT management briefed Regional Council on cybersecurity in 2022 and 2023. The 2023 briefing was in response to a councillor request to understand what's being done to prevent and prepare for cyber attacks. While the briefing provided an overview of areas management is focusing on, it did not indicate that resource needs had not been identified or assessed. Next slide, please. Management has identified cybersecurity risks through internal reviews and external assessments prepared by consultants. However, these risks have not been effectively assessed and prioritized. Management started a cybersecurity risk register, but it is inadequate. The risk register has 1 risk assessed and 3 other issues identified. Management does not have timelines for when the risk register will be completed. Risk registers centrally capture key risks and allow management to assess and prioritize them while identifying where mitigating controls are not sufficient. Not centrally capturing and assessing key cybersecurity risks increases the likelihood that they are not appropriately addressed. There has also not been an exercise to identify the organization's critical systems. We were told that systems are treated equally. Doing so helps to prioritize resources to protect systems and inform disaster recovery priorities. Next slide. External consultants completed security assessments in 2018, 2022, and 2023. We are recommending management monitor to ensure key concerns raised by consultants are addressed in a timely manner. Next slide, please. We looked at management of physical access to HRM's network infrastructure. We found that data centers have physical access controls to help restrict access. This is important to protect HRM's IT system from unauthorized access or tampering. We also found that data centers had environmental controls, which help ensure the availability of HRM systems by protecting equipment from damage or failure. This included things like raised floors to protect equipment from flooding, air conditioning to prevent overheating, and fire suppression equipment. We were also told that there are backup power sources. Data centers house critical network infrastructure, so having controls that prevent damage or keep this equipment operational is important in preventing outages and ensuring the security of HRM's data and systems. Next slide, please. So continuing with physical access, we did find there are some areas for improvement. IT does not have policies or procedures to manage physical access to data centers or a documented procedure for visitor access. These procedures are important so staff and management know who should have access and under what circumstance, and what steps they should take to ensure security of critical network infrastructure. We have recommended that these procedures be developed. Access to data centers is granted through swipe or key access. We noted some employees with swipe access not required for their jobs. Management removed it when this was brought to their attention during the audit. Corporate security records indicated that there were 12 keys assigned out to IT staff. Management told us that the staff had actually turned in their keys when the swipe card access was introduced, and that IT had to thrown out the keys instead of returning it back to corporate security. We recommended that the locks be changed immediately, and management has told us that this has been completed. Next slide, please. Moving on to logical access to the network. IT does not have an access management policy that covers the management of logical access to HRM's network. However, we noted IT does have some documented procedures to manage user and administrator access. Policies and documented procedures are important to help management and staff understand their responsibilities around ensuring access granted is appropriate and is removed when no longer required. This helps to reduce the risks of providing employees or third-party contractors with access that they don't require for their jobs. I will now hand it back over to Evangeline to discuss system protection.
Thanks, Ashley. So HRM has a process to manage changes to its IT assets, which is positive. We examined 60 change tickets, and we found that changes were mostly documented and approval was as required. We also looked at policies and processes around patch management and found that documentation of processes needs improvement. Additionally, we found HRM does not have a list of approved software, so IT staff should have a list of software that has been determined safe to install for the organization. A cybersecurity awareness program was rolled out in October of 2022. Employees were given 30 days to complete the training. As of February 2023, 31% of employees that the training was sent to had yet to complete it. IT has not advised business unit leaders of which staff have the training as outstanding. That training is an important aspect of cybersecurity. Cyber attacks often start with phishing or similar efforts in relation to employees. I'll also note that as of February, 11 of 17 elected officials had not completed cybersecurity awareness training. So it is important to make sure that that is completed to help ensure the security of HRM's systems. Improvements are needed in processes to make sure HRM's network is available. HRM has documented backup procedures, but some improvements are needed. There is no asset management policy, and we found HRM does not have an accurate inventory of IT assets. Server inventory and network device inventory were not complete or current. Computer inventory is tracked via a tool, but there are inaccuracies in it, And we also noted that the tool notes 451 laptops as missing. IT does not know the location. That is a risk if the machines contain sensitive data. So to wrap up, the public report has 16 recommendations. All have been accepted by management. There is also an in-camera report, and it is important for elected officials to consider both reports, as well as management, in assessing the overall results of the audit. And as is the typical process, the audit will be followed up in 18 months. I'd like to thank staff and management for their cooperation during the audit. IT audits tend to be larger and longer, so I'd like to, say thanks for their professionalism and their cooperation throughout, and thanks also to the team in my office who worked on this audit. And just before we move to questions, just a reminder to make sure that any questions relate only to the public report. There is an in-camera report. Ashley and I will present on that at an in-camera meeting shortly, and respond to any questions related to that report in that session. Thank you.
Thank you very much for the presentation, Evangeline and Ashley. Go ahead, Mr. Mayor.
Thanks very much. Thank you, folks, for this. You've heard me say this before, Evangeline, and you won't be offended when I say that having an Auditor General is like having a regular colonoscopy. It can be uncomfortable, but it gives you a roadmap as to what needs to be fixed, and if you do it right, how you can fix it. I think that's true, and I expect, when I read this report, there's things in here that concern me. On the other hand, I look at the recommendations and I see some of them are already complete, and that management, I think, agrees with just about every recommendation that's in the report, which I think is encouraging. So I don't have any questions right now, but I want to put a motion on the floor, Mr. Chair, to request the CIO to develop a prioritized action plan within 4 months to report back to Audit and Finance, showing how these recommendations will be addressed with timelines and resource implications.
Seconded by Councillor Lovelace. Thank you. Does the clerk have a copy of that motion? No,
I don't
she's
think so.
shaking her head.
Shall I read it again, or do you want? Okay. Request the CIO to develop a prioritized action plan within 4 months to report back to Audit and Finance, showing how these recommendations will be addressed with timelines and resource implications. I'm going to say it again? Or? Yes, it's on paper. Well, it's not really on paper. It's written down below in hand. There. Just one question. We're the only community with an Auditor General in Atlantic Canada. Do you have any sense what other cities, either in Atlantic Canada or like, this is an issue for all of us. We've talked about this in the budget process, that this is something that we're all going to have to figure out. And I think anybody who's in management or an elected official these days is worried about this. And we see private companies getting caught up in horrendous situations where they end up paying a lot of money out. And sometimes, in what I guess you call ransom, but in other cases, trying to fix these problems. So do we have any sense how often this is, was it St. John that had an issue, or anyway, do you have any sense of that as part of this?
I mean, certainly, I think any look at the news will give us all a good understanding. Cyber attacks are only increasing, right? And the reality is, government organizations as well as private sector organizations are all potential targets. And I guess that's one of the reasons why it is important to have really solid processes that are from a documentation standpoint, so that staff know what to do. When there are issues, it's important to have a good risk register where you've examined all of those things. And it's really important for things like cybersecurity awareness training to be, completed by as many folk as possible. Your employees are often your first line of defense, if you will, because phishing attacks would be something that would be quite similar, would be quite a mechanism that's used these days by a lot of hackers to try to get people to click on links and such in emails. And I guess one thing I'll say in terms of other organizations is, there's no doubt, there's not an organization out there that you wouldn't look at and find some things to deal with from a cybersecurity perspective. And I guess it's important to neither inflate nor deflate the results based on that, right? I think it's important to assess where things are and what it makes sense to do in order to move to a better place, I guess, with regards to cybersecurity for any organization. And I also think it's important not to look to other organizations and say, well, everybody's having issues and we are too, and so we're all in the same boat, because ransomware does come. is one of, to your point, that can happen, and yeah.
Thank you. I don't want to ask anything else. I'm sure the chair would remind people that we want to be careful what we talk about in a public session on this topic. We have work to do, but I do have confidence in the leadership that we have in IT now to help us with this. It's pretty urgent, and we appreciate this report for the information it gives us. Thank you.
Thank you very much, Mr. Mayor. Go ahead, Councillor Stoddard.
Thank you, Mr. Chair. I noticed in the report the recommended, or the management said 2025, and by my calculations, that's about 2 years. My question was, based on the risk and assessments, is there any way it can be expedited? And then Mr. Mayor kindly said that he was giving 4 months for the CAO to give us an update, so I concur with that. Not sure if you can answer this question, but IT staffing issue. Do you know the current amount of employees? I don't know if that's...
We have David Thorpe
any
from IT
resourcing
who is
questions
able to answer that question.
would be best directed to David, for sure.
Thank you.
Through Mr. Chair to the councillor. So we have 6 cybersecurity people in our cybersecurity team. Sort of related to that, we have 13 application administrators, 10 service desk analysts, 8 infrastructure analysts, and 3 network administrators. So whenever you're dealing with things like this, it's not purely a cybersecurity team that does the work. A lot of it is infrastructure pieces, as well as our service desk and our application administrators.
Okay. So based on those numbers, will you be able to complete what is required in the next 4 months through the CAO?
Through you, Mr. Chair, to the committee. So no, not as up the side of their desks. They have, full days already. So we'll work with the CAO to determine the priorities of the things we want to work through and the pace we want to work through them and the approach we want to take. So there will likely be resourcing needs to work through those initial recommendations. Potentially, there may be operational needs that come out of it as well, but we'll determine that through addressing the recommendations.
Okay. My last question is, what happens when employee management and counselors leave their positions? How long does it generally take to delete their access?
So currently, that gets, we get informed of that. Sorry, there's a few different paths through that happens. The way it should work is that we get informed, an automated response through one of the HR systems to tell us to decommission those. There has been some process issues in the past, though, where business units haven't fully informed, which is where we have some issues at times. So there's a little bit of work to do on that process.
Sorry, I have one more question.
Sure.
Users, is there any recommendation or thought to changing passwords every 30 days? I know it would be an inconvenience to some users, but...
Absolutely.
I see somebody does not like
yes.
that.
So through you, Mr. Chair, to the committee. So yes and no. I mean, when you think of things with access control, it's not one piece that's important, right? So there's what's the format of your passwords, how frequently are you changing them? And actually, more importantly now, we're moving towards multi-factor authentication, which each of you would be involved with. So basically causing a different way for you to identify yourself. So actually, experts are even recommending, in the face of having that in place, I mean, Microsoft themselves have stopped causing resets to happen in the case where you have MFA. So we'll be more focused on getting our MFA rollout completed to the entire organization. Currently, everybody who is a full-time employee and has a HRM-issued device has that enabled for them. We're doing a pilot with a business unit now for those who don't have an issued device, how we'll do that. And that'll actually give us more security than anything on the frequency of password changes.
Great. Well, thank you, and thank you, Evangeline, for your team. Thank you so much. Thank you, Mr. Chair.
Thank you very much, Councillor Stoddard. Before we go to Councillor Lovelace, David, you had mentioned that you would get notified by HR when someone leaves the organization, but there are a number of internal transfers, and I'm wondering if you would get notified by HR when someone changes a position, changes up and down within the same business unit, that type of thing.
Through you, Mr. Chair. So yes, not through HR. So there is a workflow for a business unit to fill out when employees move around.
And you would be notified based on that?
Through that, yes.
Okay. Thank you very much. Councillor Lovelace.
Thank you, Mr. Chair. Thank you, Evangeline. Great presentation, great report. And thanks for your answers, David. So this is really timely, considering Kings County just notified the public that they experienced a cyber attack in July. You know, here at HRM, we've seen our website down. We've been advised to change our password several times. I think TikTok's been banned. We're at the point now where, you know, we can't find 451 computers, or not sure where they are. What I'm seeing from this is we lack rigor. We lack the processes and the detailed kind of analysis that's needed internally with our IT department. Considering the severity of the cyber attacks and the potential for shutting down business at HRM, I'm wondering how we elevate this more to an EMO perspective, because I would think that the response from the municipality from a serious cyber attack would require some kind of emergency management. What is the recovery plan? So I know that you haven't dug into that, but I think, Evangeline, you sort of headed us towards that direction of, well, what happens after a cyber attack? How do we prevent it is extremely important as well. But what happens when we actually experience that? You know, what is the approach to a recovery if we're not even sure what's happened and we don't have the process in place to very quickly identify where the attackers came in, what information was stolen? You know, there's just so many questions that are unanswered here. So thank you, Mr. Mayor, for putting the motion on the floor. Because one of the things that I continue to be frustrated with the recommendation process in these reports is the fact that the management response is, you know, it doesn't include timelines. It basically is a reiteration of what the recommendation is. It's, yep, we agree. Well, we're not gonna disagree with our Auditor General because the homework's been done. But if the recommendations and the management response pretty much mirror one another, without any kind of timeline or commitment to a timeline, it is very concerning that, you know, and you look at the previous reports that still are, you know, not meeting the needs of the municipality to be able to check off those boxes to say, yes, we're done and we've changed our way of doing business. So my question to you is, how do we elevate the severity of this and ensure that there's a recovery plan after an attack actually takes place? And have you considered this and spoken with management about that? Thank you.
So to your point about action plans, I mean, I hope that that's what you will get at that 4-month point. And I mean, one thing I will say in relation to this, and I know in terms of training that there was some discussion about whether or not dates should be in report responses from management when the report comes to the committee. And for those of you who may not know what I'm talking about, members of the committee had some training in terms of sort of best practices for audit committees recently. I will say though, just so you're aware, this was very much down to the wire to complete. Before I left, I very much did not want to leave a period when there wasn't an Auditor General and put the office in the municipality in a position where a bunch of subsequent event work might need to be done. I mean, you would have heard that talked about from a financial statement perspective. It's quite relevant from a performance audit perspective too. So if there was a big gap, we very well could have had to redo a lot of the audit. So, I mean, from that perspective, in management's defense, I don't know how much time they would have had to put timelines on this yet, because we were very much finalizing some of this with them up until very recently. And so hopefully at that 4-month point, you'll get that information.
Okay.
In terms of sort of recovery after disaster and stuff, yes, I think that's a very relevant point too. I mean, cybersecurity has reached the point where it's not if you're going to be hacked, it's when you're going to be hacked.
That's right.
You know, no matter what you put in place, really. And so, yes, that might be an important thing for the committee to follow up with management in the future as
Okay.
well.
Yeah, thank you. Thank you so
Just
much.
from a general topic perspective, right, that's a important area as well.
Yeah, absolutely, because, you know, it could halt business completely at the municipality, which would have devastating effect. So thank you for that. Good work.
Thank you very much, everyone. I don't see any further names on the list. One of the things that we need to keep in mind is that not every organization is the same in terms of lifespan, maturity, capability, that type of thing. And this is an incredibly timely report, as has been mentioned, because of recent cybersecurity attacks in other places. And it's great to have this review and be able to use this as something that we can move forward from as our IT capabilities mature. So I'm thrilled to have this at this point. Thank you very much, Evangeline, and thank you, David, for the work that you will be doing to make sure that these recommendations are covered. Go ahead, Evangeline.
I did just want to make one more comment. I think all members of the committee already know this, but, you know, I'm sure there are reams of the public listening in today, without a doubt. But I do just want to make sure from a public perspective that folk realize that there's an in-camera report. And whether the results of that are excellent, abysmal, or in the middle, it would be in camera regardless. There is no stratosphere in which we would report certain aspects of cybersecurity publicly, no matter what. So I just want to make sure that people don't take the fact that there's an in-camera report as, oh, it must be negative then, they must have found things, because we would not report the good either. So we wouldn't report good, we wouldn't report bad publicly, for the simple fact that good results can be, oh, it's in good shape. Maybe we'll see if we can get in. And bad results, of course, can create a definite attraction for hackers. So in either scenario, you can attract a lot of unwanted attention. So I just felt like I should put that out there as well, because I wouldn't want people to think it a reflection of the in-camera report.
Thank you very much, Evangeline. Can I have, again, I don't see any further names on the list. Can I please have a motion for us to move in camera? Or there is a motion on the floor. Do we need to address that at this point, or can we move in camera and get the rest of the discussion happening on that first, Mr. Mayor? Okay, go ahead, Mr. Mayor. You have your
Motion's on the floor, I think. Seconded.
Yep. Okay, the question has been called. All in favor of the motion on the floor, please signify by saying aye. Aye. All opposed? Great, thank you very much. And at this point, can I please get a motion to move in camera? Thank you, Councillor Lovelace, seconded by anybody? Councillor Hensby, all in favor of moving in camera, please signify by saying aye. Aye. All opposed? Great, thank you. Let's go back in camera. Okay. Thank you very much, everyone, and welcome back to the public session. I'm sure everybody has been waiting with bated breath on what comes next. Jumping back to the middle of the agenda, item 12.2, there is nothing from staff. 12.3, there is nothing from the Grants Committee. 12.4, members of Standing Committee, there is nothing from that. There are no motions. We had item 14.1. Mr. Mayor, you had moved that in camera?
Yeah, I'll move the minutes.
Seconded by Councillor Cleary. All in favor of the minutes of June 21st, please signify by saying aye. Aye. All opposed? Great, thank you. 14.2 was a private and confidential report. 14.3 was the contract negotiation. Mr. Mayor, you move that?
Recommend Halifax Regional Council 1 adopt the recommendations as outlined in the private and confidential report April 12, 2023, and 2 direct that the private and confidential report dated April 12th be maintained private and confidential.
Seconded by Councillor Hensby. Thank you. All in favor, please signify by saying aye. Aye. All opposed? Great, thank you. 14.2 and 14.4 were personnel matters that had no motion attached. Item 15 was added items. There were no added items. Notices of motion. Not seeing any. Okay. Public participation is item 17. This would normally be where we ask members of the public to step forward and make a presentation. This happens at every Audit and Finance Standing Committee meeting. Would any members of the public in the gallery like to step forward and address the Audit and Finance Standing Committee? I don't see a whole lot of people there. Second time, would anybody like to step forward? And third time, would anybody like to step forward and address the Audit and Finance Standing Committee? Not seeing anybody step forward because there's nobody there, and there were no names signed up on the list as of yesterday afternoon, or I guess as of this morning. Then we will move ahead. The date of the next meeting is September 20th, 2023, and can I please get a motion to adjourn? Thank you, Councillor Hensby. It is 1:37. We stand adjourned. Thank you very much, everybody.